What's the number one thing that you need as a business executive today to improve the quality of your and coverage of your benefits program while simultaneously reducing the costs? When I talk to most people about that, they think those two goals are mutually exclusive. How could something possibly be better if it costs less? Welcome back to the Benefits Insider. I'm your host, Chris Hamilton, and today I'm going to talk about the number one trait that we see with our clients having the most success managing the cost and the quality and the coverage of their health insurance plans for their companies. And I think in my entire experience, if I was to sum this up, I think this is probably the most important trait that those executives and our clients have that have had the best success accomplishing this. So I want to share this with you, and you ready for it? Now I want you to stick with me here after I give it to you, and I'm going to explain specifically what I mean and how it might relate to you. So actually this comment was shared on a post that I had shared on LinkedIn a while back. I was interviewing a CFO client of mine, and he was sharing his experience and giving advice to others about how they had accomplished this. In fact, this was a small to medium-sized business that had saved over $1 million over the course of a few years and improved the quality of their health insurance at the same time. In fact, I'll link to that interview here if you want to hear what this gentleman had to share. But their plan, they offer access to free medicine, free surgeries, all sorts of free healthcare, no deductible services in their health plan, and they were able to save over $1 million doing that, which is pretty unique. But this was the comment that was shared, and this is my tip. This is the number one thing that I see across my clients over the last decade that determines, are they going to be able to successfully solve this problem or not? It's the mindset of that executive and that executive team. And I'll share what I mean by that. When I meet with somebody and I'm talking to them about what we're seeing happening in the marketplace, I can usually pick up, now if I meet with you, you're going to gauge me on this, but I can usually pick up in the first 5 minutes this person's perspective on the market. And what I mean by that is there are some employers and some executives that are out there, this may be you, and if it is, there's nothing wrong with that. It's just, we are who we are. But there are some people that I meet with that think the health insurance markets are healthy, that there is a lot of risk in health insurance markets, and those insurers it's expensive because they pay for expensive things, and the market's working the way that it's supposed to and that we want it to, and they don't really see many issues with it. Cost isn't a problem for them, and it is what it is. We'll budget in the increases every single year and we'll move on down the road. It's not that big a problem. That's one camp of executives that I meet. But I would say the vast majority of executives that I meet, primarily in that middle market space. So if you've got 50 to 1,000 or 1,500 employees, the vast majority of employers I meet that fall in that size category, this is what they share with me. And I would probably say it's about 80-85% of those employers that I meet with. I'm frustrated with rising costs. Really the only levers that I have to reduce my costs are reducing the coverage, reducing the benefits, increasing deductibles, removing coverage. As we strip away coverage, the cost typically will go down. And so an employer might get a 15 or 20% increase in their premium cost at renewal, and to whittle that premium increase down, they might do some of those things I just mentioned. But when I'm talking with those employers, the mindset that I'm getting from them is, I don't think the market is efficient. It doesn't seem like it's working very well, which is one reason costs are going up. There's not as much competition in that market as I'd like to see. And quite honestly, I think people are profiting from the system the way it's designed today, but I can't put my finger on exactly what it is that's wrong. It's too complex to solve. But I think it's probably broken. And when I hear that sentiment coming from somebody, I realize they have the mindset. They're at least on the right track. And what I mean by mindset is really an open mind to hearing an alternative or a contrarian viewpoint. Because the question I always like to ask, and I'll ask it to you now, is can we really trust the people that help create the problem, that profit from the problem, to actually solve the problem? In my mind, that's not Einstein's definition of insanity, but that would be mine. His was Einstein's was doing the same thing, expecting a different result. That's like the definition of it. Mine is expecting people that cause the problem, that profit from the problem, to actually solve it. And when I say the people that cause the problem, I mean, you could put these into three different camps. Let me do that real quick. The government helped create a lot of the problems that we're seeing today, either by overregulation or lack of regulation and oversight. We can look at some of the biggest carriers, all of the consolidation, all of the vertical integration that they've done under the government's watch that hasn't been restricted. We're starting to see some of that causing problems today. But why did the health insurance companies move into that model of vertical integration to begin with? It was it started before the ACA, but it really was, the turbo button was hit on vertical consolidation and vertical integration once the ACA was passed. Why? Because ACA changed the way commercial health insurers can make money. And here's the thing I always think about. My grandpa actually told me this. He said, the smartest people don't work in government. If you work in government, I don't mean that as an insult, but I mean it from the standpoint of the government is reacting to something that's happening. The private sector, the market, the free market, is going to figure out the mousetrap, and they're going to adapt to it. And that's exactly what commercial insurers have done. And so I look at the way commercial insurers make money, and I've covered this extensively in previous episodes. The way insurers make money is, one, as a business owner, is the way you don't want them to make money, and they actually make more money when you pay more money. So their incentives are automatically aligned from yours day one. So that's camp one, who helped create these issues that we're seeing today. Two, and I'm going to kind of throw stones inside of my own industry. I'm kind of look like I'm in a glass house right now, but it is what it is. I'm going to call a spade a spade. The brokerage industry really hasn't helped the problem. The brokerage industry is paid very large sums of money by insurance carriers to keep the music playing, and oftentimes it skews brokerages' advice that they give their clients. There's a lot of talk right now about fiduciary responsibility of plan sponsors, but I think the same question has to be asked back to the brokerages, because brokers are not fiduciaries to their clients. They may act in certain instances in a capacity that could be confused as a fiduciary. But if you look at how brokerages get paid, if I was a fiduciary of your company, I'm just making this up, I'm broker X, Y, and Z down the street, and I'm giving you advice on a plan, and I take a bonus from a carrier, and that bonus skewed my judgment. And what I mean by it, it's hard to determine that, right? But if I only show you 4 options, but there were really 6, I left 2 of them off the page. The other 2 I would show you 1 or more work and probably don't pay me a bonus. But I show you the one, I kind of put it in that spreadsheet, and I'm explaining all the pros of this one, and I get paid a bonus on it. That's kind of a conflict of interest to some degree. And many brokerages now were required by the CAA or the Consolidated Appropriations Act. You're probably getting a statement from your broker that says, this is how I get paid. We're required by law to do that now, which is a good thing, I think. But we still see all too many times, I've seen some of them from other brokerages, where they'll list in fine print that, we may get paid a bonus from a carrier from time to time, but we're not able to determine what that is today. Well, that's where big forms of compensation in aggregate are held for a lot of these brokerages. And some of them it's 7, 8-figure bonuses, literally. And when you think about it, for one employer, it might only be $5,000, $10,000, $15,000 bonus that's paid on that one particular group. But if you're a national brokerage and you have thousands and thousands of clients with that brokerage, you just do the math on that. That adds up to some very large, substantial money, and that influences. And that's the reason why carriers will pay those bonuses to brokerages, because they know they're buying influence. They know they're buying recommendations. They know they're buying somebody's support. And it's a lot like campaign contributions, which, by the way, is the third bucket. So to bring in the regulatory and the legislative component to this, which is in my mind the third leg of the stool of the problem, if you look at lobbying dollars that have been spent in Washington over the last decade, there's been over $6 billion spent lobbying our legislators from the healthcare and health insurance industry. $6 billion over a decade. And so just to put that into perspective, that's more than 2.5 times the money that was spent by oil and gas and defense combined over that same time period. We're talking really big money buying influence. And the question I always ask people is, $6 billion over a decade, if somebody wanted to solve the problem or influence solving the problem with that kind of money and that kind of time, don't you think they could have done it? And the answer, in my opinion, is yes. So what's that money being spent doing? What are they doing with that money? They're wanting to keep the music playing, keep the merry-go-round going so everybody can continue making money. And you're seeing that now. There's multiple insurance companies that are in the news about an acquisition that they've made or a company that they've owned that has caused major issues that are now being flagged as a conflict of interest. Well, the Department of Justice didn't seem to think that it was an issue when that problem was raised years ago when they were making that acquisition, but now all of a sudden they think it might be. Just seems suspicious to me. But my whole point, to wrap this whole thing up, going back to the mindset of the business executives, the owners, the CFOs, the HR professionals that are solving this issue in their company. They're addressing rising healthcare costs. They're addressing diminishing benefits or some combination of those two. The ones that are having success, and I define success really in 3 ways, are the costs at least stabilizing? Can we just set a high water mark and let's just stay underneath those costs? Or at the very outset, are the costs reducing because we're stripping out waste and abuse and inefficiency, right? So those are 2 things. But then are we making the benefits better? Because I can sit here right now in front of you and tell you, I 100% can reduce the cost of your benefits, but I'm going to have to make them worse. Well, who wants to sign up for that? I think the people that are really trying to solve the problem are saying, how can I provide more to my employees, but do it in a financially prudent way? And the people that ask that question, combined with, I'm not so sure that this system is working the way that it's supposed to, it's not efficient, it kind of seems broken. That's the mindset that opens up the mind to alternative contrarian ideas, which is what we're doing within the Benefit Insider programming. And so what I see is kind of this vision of where we're going, where most of our clients want to get to is, how do I have a plan that looks very similar to what I have today? Most of our clients, they're using a big national network from one of the big carriers, probably the one that you're using today, but they've built in all these programs to prevent overspending on healthcare. And this is the waste part of it. We're paying for things we shouldn't, or we're paying a price that's too high that we shouldn't. The reason why you want to address the price of healthcare is because the more you spend on healthcare, the higher your insurance premiums have to be to cover that cost and make a profit for the carrier. So we address waste and overspending. We use a plan that looks very similar to what the employees are used to today, but then we add in all these additional benefits that help us address that number one thing, which is the cost of healthcare. And when employees are engaged in that process, when they're helping prevent the employer or the employer's insurance from overspending on healthcare, they get a benefit too. They get reduced premiums, they get reduced out-of-pocket costs, they're getting access to more for less. Everybody wins in that scenario. So the most important thing to designing a high-performance plan that provides more benefits, more coverage, and lower costs to your employees and to your company is aligning everybody's interest. Anybody that's involved in your health insurance plan has to have the same interest that you. The most important part of that is nobody can profit if your costs go up. We shouldn't incentivize people to make more as costs rise. We should actually incentivize the opposite. Incentivize compensation and reward compensation for the value that's created. And actually several of our clients are moving into that model. And once you realize from the administration, from pharmacy benefit management, from the way your advisor's paid to the way claims are paid, everybody that's in that value chain, if their motives are aligned with yours, you're going to get higher performance. It's the same reason you probably give some sort of incentive compensation to production staff in your company. If you have salespeople that work inside of your company, you're probably giving them either commission or you're giving them bonuses. In the same way, you probably don't keep low performers on staff very long. You've got to be able to do those same things inside of your health plan. Because here at the end of the day, look at what you spend, your company spends on health insurance in a given year. It actually is a division of your company. Most people don't think about it that way, but that's really what you're running. Is you're running a healthcare division inside of your company, yet we don't manage it like it's a division with a P&L and accountability for the results. We outsource that to somebody else who doesn't manage it like it's your business. They manage it like it's their business, answering to their shareholders, not your shareholders, which is you and your team. So the clients that are having the best success have the right mindset. They're taking ownership of the health insurance plan with the right advisor. The right advisor will do all that for you, and they're aligning the incentives to turn the performance that's needed for their company and their employees. I hope this was helpful. If you've got questions, feel free to send me a note. Happy to answer any questions. I'm also willing to share the playbook that we use with our clients that lays out these 3 pillars and examples of those so that you can implement those into your business to get higher performance, more profitability to your bottom line, and more money to your employees in the form of their paychecks, reduced insurance premiums, and also better benefits. So I hope this is helpful, but until next time, take care.